What exactly does intercompany segment do? Let us try to understand that. Intercompany segment makes it easy to maintain separate account code combinations for intercompany receivable and payable accounts in relation to other group companies. That is, it facilitates the breakup of intercompany account balances from or to the other group companies. Let us try to understand that with some examples. These are two journals. The first journal is payment of an expense. Company 20 is making payment of an expense that is to be borne by company 10. So company 20 is going to recover this expense from company 10. And in the second journal, company 20 is making payment of expense that relates to company 30. So company 20 is going to recover that amount from company 30. That is why when we enable the intercompany accounting, such lines are automatically inserted. For example, in the first scenario, company 20 is recording a debit, which means an intercompany receivable, from company 10. And company 10 is recording an intercompany payable, which is the credit, to company 20. In second example, company 20 is recording a receivable from 30 for 2,500 and company 30 is recording a payable to company 20 for the same amount. But you can see when we are not using the intercompany segment, at the time of recording of these intercompany receivables and payables, there is no mention of to which company that particular receivable or payable relates. And that is the reason, if you look at these two lines from the perspective of company 20, the account balance that will be maintained at the end of the month will be like this. Company 20 has an intercompany receivable amount, because it is a debit balance, of 3,500. But here we do not know this 3,500 is recoverable from which group companies. That is, the breakup of this balance is not available. Let us see how intercompany segment resolves this issue. If we use the intercompany segment, it will automatically record in the intercompany segment to which or from which that intercompany payable or receivable amount is due. For example, this recoverable amount of 1,000 is due from company 10, 2,500 is due from company 30. Both account combinations are prefixed with 20, that means we are looking into the books of company 20. Now let us go further and understand what happens when we use the intercompany segment. This fourth segment is the intercompany segment, and we are entering zeros there when we are doing a manual entry or when we are doing a payment or invoice in payables or any transaction in the submodule. And when we process that particular journal, it would automatically insert lines like this. Now let us look at these lines carefully. Company 20 is recording a receivable, which means debit, of 1,000 from company 10. In the earlier situation, there was no recording that this is receivable from 10. So at the end of the month or when the account balance was calculated, this information was missing, so that breakup could not be done at the time of finding the account balances. Similarly, company 10 is also recording a payable, that is 1,000, to company 20. Here also company 30 is recording a payable to 20 and company 20 is recording an intercompany receivable from 30. So at the end of the month, when we take up the balances, we get to see two different accounts. So it maintains separate account combinations for each intercompany receivable payable accounts in relation to the other group companies. Receivable from 10 is 1000, receivable from 30 is 2500. That is how we get a breakup of intercompany receivable and payable accounts. Thank you for watching the video, and you are welcome to oracleerpguide.com.